Good evening, sir.
Okay, today we have to discuss in company accounts. So I have uploaded one question in the LMS. Please go through that one. Okay. So in this question, right balance of Y2K Private Limited as at 31st March 2023 is given. Stated capital, retained earning, plant and equipment, bank loan. So some other informations are given. So additional information also given. So according to the additional information, we have to go through the accounts. Okay. So the additional information were as follows. The company has made a right issue during the year to all existing ordinary shareholders, and they issue one share for every 20 shares. So those who have 20 shares, when additional shares is the right issue. So it was held on April 2022 at rupees 60. All shareholders have taken up this right and collect the cash from the all shareholders during the year. Has received the cash received has been debited in the cash account and credited to other income. Other than that, no entries were made. So only cash receipt entered. Okay, that is one. Next one, as at 31st March 2023, rent payable, prepaid electricity is also done. You will do. Plant and equipment are to be depreciated on the straight line basis method at cost and useful life. Depreciation method and cost. And the useful life of the motor vehicle and the office equipment as 4 years and 5 years respectively. Okay. The estimated income tax liability for the year of assessment 2022-23 was 2,207,000. During the year, company has paid 58,000 as quarterly income tax installment. So the tax liabilities for the year is given, and also the company tax paid quarterly, that is also given. At the board meeting held on 25th March 2023, the board of directors approved to transfer 7.5 million to general reserve. Okay, so here you can put fees. Here you can say these are rupees million. Okay. Okay, that is okay. The management of the company has decided to maintain the elements to the rate receivable at 10 percentage on the balance rate receivable as at 31st March 2023. So it is at 10 percentage on balance. Then when the interest receivable on fixed deposit and interest payable on bank loan have not been accounted in the books of account, there is no repayment in the loan due today. So we will do. So the financial statement authorized for the issue by the Board of Directors on 10th June 2023. So these are the information. The additional informations are given. 8 additional informations are given. So you have to prepare the profit or loss and other comprehensive income and also financial position is given. Okay, so these are the things you should be able to prepare. So first, you have to understand the question. Okay, now we have to prepare the statements. Okay, so I will give 2 minutes. You have to, uh, you have to Compare the statements. Okay, so you have to draw the statements. So please give me a time. So please refer the question through the LMS. We'll start the answering part. Okay, so first we will do one by one. Hmm? So the stated capital. So what do you mean by stated capital? So stated capital normally into the statement of financial position. So the stated capital, okay. So the stated capital, we have some workings, no? We have some workings. What is that? So here there's a right issue is given. Okay, there's a right issue given. So we have to make that. So what about the opening balance? Opening balance 4,800, 1.2 million shares. Students, can you hear me? So the shares, 1.2 million shares. Oh, so these are the rupees are in thousands. Huh? So don't forget rupees in thousands. So we will do in thousands. Huh? Don't worry. Okay. So the stated capital 4,800. Like that we have to use. Okay. So here what's happened? The company made a right issue during the year of to all existing ordinary shareholders and issued one share for every 20 shares at rupees 60. So what is happened for every 20 share? They have to issue the share. Okay, every 20 shares they have to issue the shares. So what we will do first, we have to do the working for. We will see first we have to put the balance. Balance how much? The opening balance 4,800 on one April 2022. The opening balance 4,800. Then they have to right issue. They have to add the right issue. How much of right issue they have to issue? The thing is already 1.2 million shares. Every 20 shares, they have to issue the one shares, right issue. Therefore, 1.2 million divided by 20, therefore 60,000 shares. 60,000 shares. Okay. For 60,000 shares at rupees 6, how much? 60,000 shares, they have to have 6 rupees, 360, sorry, 300, sorry, 3,600. 3,600. 3,600. Already the balance 4.8 million. So the share issue. Share issue, they have to issue 60,000 shares into 60 because the right issue is 60,000 shares. So 3.6 million for the we have to do the thousands. Therefore 3,600. So then what is the total amount? Total amount as the balance 8,400. So the balance of stated capital 8,400. So already you have to draw the statement of financial position. So statement of financial position, property, plant and equipment, current asset, total assets, equity and liability, non-current liability, current liability. So under the equity and liability, you have to put the stated capital 8,400. 8,000. Okay. Did you understand? So this is the working scope. So you have to write down different number because we did first one. So we have to put working for. So I check one by one. Okay. It is okay. So already stated capital amount is there. Then there is a right issue. Right issue not included in the stated capital. That's why we have to include the stated capital 8,400. Okay. Then now what is next one? Retained earnings. Retained earnings how much? 10,614 retained earnings. So we have to do the workings to retain earnings. Retain earning balance you have to put. First you have to put the retain earning as a balance. Okay. First we have to do the balance. Then we have to add the profit and transfer. Later we will do. First we have to put the opening balance. What about next one? Plant and equipment at cost. Accumulated depreciation also given. So now we have to do the property, plant and equipment depreciation. Okay, property, plant and equipment depreciation. Okay, we will do. So depreciation. So how to calculate the depreciation? The motor vehicle, how much? Motor vehicle 10,000. What is the useful life? Useful life is 4 years. 4 years. Therefore, we have to cost divided by 4 years, 2,500 for the year depreciation for the motor vehicle. Then office equipment cost is 5,550 divided by 5 because the useful life is 5. Therefore, the office equipment depreciation is 1,110. Okay. So now we will transfer to the depreciation cost and accumulated depreciation. So in case of the depreciation, motor vehicle depreciation comes under where? Motor vehicle depreciation. The motor vehicle depreciations comes under the distribution expenses. Comes under the distribution expenses. So you have to put the note distribution expenses. Under the distribution expenses, motor vehicle depreciation 2,500. Then equipment depreciation. Equipment depreciation under the administrative expenses. Office equipment depreciation comes under the administration expenses 1,110. Okay, so this is the depreciation, current depreciation transferred to expenses. So under the selling expenses or distribution expenses, motor vehicle depreciation 2,500, administration expenses, office equipment depreciation 1,110. Okay, now we have to move to the statement of financial position. So what about the cost? Cost is 10,000, 5,550. So accumulated depreciation means already accumulated depreciation is given 5,000 and 2,200. With that fund, we have to add the depreciation, current year depreciation with the 5,000 and the 2,200 of the office equipment. Each and every amount with the motor vehicle, with the office equipment, we have to add the depreciation. So therefore, total accumulated depreciation 7,500 and 3,330. 3,330. So the cost accumulated depreciation then carrying value. Cost minus accumulated depreciation is equal to carrying value. Therefore, the carrying value 2,500 and 2,220. Did you understand the depreciation? Okay. Then we will move to three. Students, can you understand?
Yes, sir.
That's okay. Thank you. Next one is the 25% bank. So what is happened? The bank loan did not calculate the depreciation. Sorry, amount. No bank loan. So what about the bank loan? 25% bank loan. How to calculate the bank loan interest? So under the finance expenses, you have to put the bank loan interest because the bank loan already get how much. So you have to check the trial balance. Bank loan 4,650. So the 25% bank loan. Therefore, the interest is 1,162 point. We are doing the thousand. Therefore, 1.162.1, sorry, 1,162.5, the loan interest. So, what is the loan interest? Loan interest did not paid. Okay, loan interest did not paid. So, there are two entries for the adjustment. One is the profit and loss account or income statement. Other one is the payable. Payable means interest payable. Interest payable how much? 1,162.5. Under the current assets, interest payable 1,162.5. That is okay. Then cash and bank. What is the cash and bank? What about the cash and bank? Any adjustment in the cash and bank? No, there is no adjustment in the cash and bank. Under the current asset, you have to put the cash and bank 3,511. 3,511. Cash and cash equal 3,511. 511. 3,511 cash and cash equal. Then rate receivables. What do you mean by rate receivable? Rate receivable are the assets. So we have to enter into the rate receivable. So what's happened to the rates receivable? Any adjustment? So what are the adjustment? You can see the final, there is a deposit. Here you can see the sixth one. The management of the company has decided to maintain allowances for rate receivable at 10% on the balances on the rate receivable. So the rate receivable balance, how much? The rate receivable balance. What is the rate receivable balance? 6,280. So therefore, the rate receivable balance 6,480 less 10% allowance. So from the 6,280, 10% allowance 628. Therefore, you have to minus 6,228 minus 628, 5,652. So that in the rate receivable, closing balance is 6,280, 10% of allowance. So that allowance should be deducted from the rate receivable. So then that 628 transferred to where? You have to deduct it from the rate receivable. That allowances comes under where? The allowances comes under any provision. There's a balance, no? Allowances for trade receivable, one for 2022, 125. Okay, so we have to do that one. Provision for bad debt account. So this one 6,628. No. So we can see provision for bad debt. What about the balance for provision for bad debt? The balance is 125. What about the journal entry for the bad debt? What is the journal entry? Provision for bad debt account debit, receivable account credit 628. 628. Then you have to balance the bad debt account 628. Then you have to find out the profit and loss. You have to find out the profit and loss. How much you have to transfer in the profit and loss. Already balance is 125. Now we have to make the allowances 628. So balance 503 transfer to the profit and loss account as a bad debt. So under the selling and distribution or distribution expenses, bad debt provision 503. Did you understand? So from the bad debt 10% allowance. So in the current assets, trade receivable 6,280 minus 10% is 628. 628. So therefore, you have to deduct 6,280 minus 628. 5,652 is the trade receivable balance. Already the provision is there. Provision for the bad debt. So provision balance is the credit balance 125. So the bad debt allowance, provision for bad debt account debit, creditors debtors account credit. Okay, so you have to identify the balance amount. The balance is the transfer to the profit and loss account. Balance is the transfer to the profit and loss account. So the 503 as a bad debt provision 503. Okay, that's all. What about next one? Trade payable. Trade payable. Any changes in the trade payable? Trade payable, there is no adjustment. So therefore, under the current liability, trade payable 1,559. 1,559. Okay, trade payable, there is no changes. So inventory. What do you mean by inventory? 650 is the closing inventory, no? 650 is the closing inventory because the date is 31st March 2023. So the inventory as the current assets. Inventory as the current assets 650. Okay, there is a one entry. Then sales. Sales how much? 20,825. Therefore, in the income statement, sales 20,825. Okay, there's a one entry. Then cost of sale. Cost of sales is for same 6,047. Okay, 6,047. Then office rent. Office rent 725. So under the administration expenses, office rent. Under the administration expenses, office rent 7. There is a adjustment. Office rent payable 50,500. Therefore, 50.5. So 725 plus 50.5, 7,000. Sorry, 775.5. Okay, so it is a payable, rent payable. Already rent 725. The rent payable 50.5 because we have to convert it to 1,000. So 50.5 is equal to 7,000. Sorry, 775 point the rent. Okay. Then next one, what is that? Fuel expenses. Fuel expenses comes under the where? Fuel expenses come under the selling and distribution because the fuel used for the vehicle. So selling vehicle. So therefore fuel 426. Then advertising, marketing, selling expenses. Under the selling expenses, advertising and marketing 1,182. Then sales commission also selling and distribution expenses. Sales commission, selling and distribution expenses 926. Okay. So the, both fuel, advertisement and marketing, sales commission. The three are comes under the selling and distribution expenses. Then water and electricity. Water and electricity, there is a adjustment. The prepaid electricity 13.5. Prepaid means already we have additionally paid. So we have to deduct that one. So water and electricity, how much? So 132 water and electricity. The prepaid 13.5. So you have to deduct it after that 118.5. 118.5 because the prepaid means that is the asset. Already you have to pay in advance. Therefore, 132 minus 13.5. So 118.5 the water and electricity. Then office maintenance expenses. Office maintenance expenses means it is an administration expenses 372. Salaries, wages, EPF and ETF. So there is an adjustment is given. Salaries, wages, and EPF. So what about the salaries, wages and EPF? So under the salaries, wages and EPF, you can put where? Salaries, wages and EPF and ETF. So it is the administration expenses. So you have to put salaries, wages, EPF and ETF 7,697. Then Bank charges. Bank charges is the finance expenses. Bank charges is the finance expenses 80. Okay. Then fixed deposit. The fixed deposit invested one for 2022, 1 year before. Okay. 1 year before. The 22% per annum fixed deposit. So the fixed deposit, we have to calculate the interest of the fixed deposit. So the fixed deposit 22,000. What is the percentage? So fixed deposit interest, not 22%, 10%, yeah. 10% fixed deposit, 10%. Please change it. 10%. So therefore, the interest 2,200. So fixed deposit interest as a income, no? First you have to enter the income, fixed deposit interest, other income 2,200. Other one is transfer to receivable. Receivable under the current assets. Current assets, interest receivable. Interest receivable and prepaid electricity also we forgot enter. So the prepaid electricity also as a asset, interest receivable also as an asset 2,002. Then fixed deposit 10,000. So fixed deposit 10,000. Okay. Then other administration expenses. Other administration expenses means under the administration expenses, other administration expenses are there. 296. So the allowances for trade receivable done. Income tax page 55. So we have to do the income tax again. We have to do the income tax. So what about the income tax account? So here you can see the income tax expenses. So we want to find out that one, no? So income tax expenses paid, income tax paid 55. Therefore, tax account credit, income tax account debit. Tax account credit, sorry, cash account credit, income tax payable account debit. Tax paid, income tax paid 55 by cash. Therefore, income tax payable account debit, cash account credit 55. Okay. Then EPF, ETF payable. EPF, ETF payable means this is the liability. So under the current liability, EPF, ETF payable 70. Other income 4,000. So other income also 4,000. So we have to enter other income under the note, other income. Under the other income also other income is there. For sorry. What about other income? 4,000. What do you mean by what about the other income? So the 3,600. What is that? It is a right issue. Right issue as considered as other income. Here, debited to the other income account. We forgot that part. So the right issue, cash debited other income account. It should be debited to the stated capital account. So therefore, we have to rectify the entry. Other income account debit, stated capital account credit. Other income account debit, stated capital account credit. Therefore, we forgot. Sorry, therefore, we have to enter other income. How much? Other income already. Other income 4,000 minus 3,000. Sorry, 3,600. 400 is the other income. Okay. So that's all, I think. So now you have to make the adjustment. Now here, fourth one, estimated income tax liability for the assessment 2007, 207. So income tax expenses. So the already the income tax paid 55. Therefore, income tax payable account debit, cash account credit. Then the fourth one is given the liability in 2020 to 23 tax liability 207. Therefore, 207. Now we have to balance. Now we have to balance the total balance 207. So then you have to find out the closing balance income tax payable 152. So already cash paid 55 debit, income tax expenses liability credit. So the balance 152 as a income tax liability. It is a current liability. Okay, income tax liability as a current liability. So rent payable also we did. We don't do, we forgot. So rent payable is the liability, current liability. So 50.5. Then so we have to make the adjustment, retain earnings. So before that, all the things are done. Now you have to balance. So first you have to balance. So you will do student. All the things have been done. You have to transfer to the income account, and also you have to first you have to get the sum, other income, how much, distribution expenses, how much, administration expenses, finance expenses, how much. Then you have to transfer to the income statement. Then you have to find out the profit. After that profit, you have to make some adjustment in the retained earning. Then you have to balance the statement of financial position. So up to that, we have to complete. So up to that, if you have any doubt, you can ask. If you have any doubt, you can ask up to that. Once I hear, if you have any doubt, ask. No? Okay. So I will give 5 minutes. You have to transfer expenses to the income statement and complete the income statement. Okay. You have to complete the income statement. Okay. All the things are done. Workings are done. So from the working, you have to transfer and find out the income profit for the year. So I will give 5 minutes. Okay, time is over. So, in adjustment for 55 tax paid for the quarterly or annual, I have not understand. Okay, so we will see. Okay, we will see. Uh, so already, we will see. So other income, other expenses, how much? So what about the gross profit? Please check it. Gross profit 14,778 gross profit. Okay. So then profit for the year. So you have to put in the working one, working two, working three. That is not the issue. So you have to put according to your workings. Sometimes you have to put the working one, other income. Sometimes you have to put administration expenses. So according to a working, so you have to follow one format. So according to the order, first sales. If any works in sales, one. Any workings in cost of sale, workings two. So you have to follow the order from the order in the income statement, because when we are marking the paper in the final examination, very difficult. Okay, so you know, huh? So I want to tell you something regarding your examination. Most of them did, but there are some mistake you've done. Okay, so first, so I will explain these things later. So in this regard, first you have to order the workings. Okay, workings order. Okay, I will explain later. So how to answer the questions in a proper way, because very difficult to mark the paper in the accounting, especially in accounting. So in the first year, when we are marking the paper in your papers, it's very difficult. Huh? So I will explain this thing later. So now we have to do the answer. So what about the profit for tax? Profit before tax, is it correct?
Yes, sir.
Yes. Okay. What about the income tax for the year? Income tax for the year 2007. No, sorry, 207. Estimated income tax liability for the year of assessment 207. So therefore, income tax for the year 207. Therefore, profit for the year 84.5. Profit for the year 84.5. 84.5. So you have to make some adjustment in the retained earning. Yeah? In the retained earning. So retained earning, opening balance, then profit for the year, then transfer. So, so you can see the opening balance is there. Okay, opening balance 10,640. Profit for the year 84.5. Transfer to the general reserve 7,500. The balance of the retained earning 3,198.5. So if you have any differences, please tell me. So the thing is, it has been done in the changes in equity, but in this question, there is no question in the, there is no requirement for the, in the question, they didn't ask the changes in equity. So in becoming, in future, we will do the like that type of question, because here only we have to make some adjustment in the retainer, only one adjustment. Okay, so in other questions, we will do all the statements. Okay, including the statement of changes in equity. Okay, so please retain earning balance 3,198.5. Any changes you will have to say. So it is transferred to the where retain earning transfer to uh, income statement of financial position, other also transfer to the general reserve. General reserve account, credit. Retained earning account, debit, 7,500. So then bank loan we forgot. Bank loan how much? 4,650. So how much? Now you can see the cost 50,550, accumulated depreciation 10,830, carrying value 4,720, fixed asset 10,000, current asset 12,000 to 26.5. Therefore, the total assets 26,746.5. Okay. Then equity and liabilities. Equity and liabilities total amount 19,098.50. Bank loan 4,650. And what about current liability? Total current liability 2,998. Therefore, total equity and liability 26,746.50. Okay. So if you have any doubt, you can ask now. So this is the statement of financial position of the Y2K program. So if you have any doubt, ask now. No, dear students, if you have any doubt, you can ask. So please, students, any doubt you can ask, otherwise we will move to other question. So don't have, we will move to next question. Take to LMS, I have upload other questions. LMS, the second question is put up. Please download and do the question. So I will give a. So this is an. So please do it this question. Okay, please do this question. So I will ask you one by one. I will call you. Then you have to show your answer. Okay, randomly I will call. Okay, so please ready for that one. So you have to do the question. So when I'm calling, whatever you did, you can show me. Okay, whatever you did, you can show me. Don't. I'm asking the full answer. So in between, I will call you after 15 minutes or 13 minutes. I will call you. You can show your answer. Otherwise, no marks. So every day I will do like that. So please do it. Okay. After 30 minutes, now 6:50. 6:50. 7:20. Not 7:20. 7:15. I will ask. Okay. One by one. So you have to do it. Okay. Okay.